Hello friends, this is Raj Sastry from Raj Option Trading. Today is April 30, 2022. Hope you're all having a good weekend. So market is very volatile. We got to be careful here. But if you're a young investor or a long-term investor, this is a great time to buy some good stocks. You could also buy some broad-based exchange traded funds like SPY, QQQ, XLV, which is healthcare, and also SMH, which is semiconductor. And also you could buy some great stocks in a basement price here. Stocks like Apple, Microsoft, Google, they all work here. It's a great time to buy some great stocks. So with that, in today's segment, we'll look at top stocks with a high short ratio. And many of you love to play short squeeze game. We got to be very selective in this market. We have to go after the stocks where there is a heavy insider and institutional buy and also fundamentally strong companies. We'll look at that criteria as we go through. I would recommend having an allocation of maybe say 10% or so in your portfolio for a short squeeze game, but don't go above 10% because market is very volatile. So it's not a great time to go big on the short squeeze at this time here. So with that, let's jump in and get started. All right, so we'll start with a quick market update, look at top ETFs by volume and look at stock with a high short ratio. This is where we can play some short squeeze game and we'll finally conclude with the few stock picks here. As we look through these short squeeze candidates, we'll look at how we can select some of these stocks, what's the best way to play short squeeze game. So with that, let's jump in. Look from a market update perspective, the fear and greed index is at 25 or so here. I can see us coming down to say 15 or 20, mainly because there is still geopolitical tension between Russia, Ukraine, there is China lockdown, supply chain issues, and we got Fed looming, and Fed wants to raise the rates, and Fed also might have some harsh language to tame the inflation. So all in all, right now we got 27 at the reading. I can see us going down to 15 or 20 as we go forward. That's why all these big drop days, especially say 900, 800 point drops, are a great time to buy some great stocks and ETFs if you're a long-term investor. So with that, let's jump in. Look from a market perspective, we got here data from Dow Jones and we had the worst January to April performance back in 1932. Look at the performance here. We had 27% drop from January to April back in 1932. And then we got 1939 here. In 1939, as you can see here, we had 17% drop back in 1939 in S&P 500. And then we got 2022. Right now we are in 2022. Look, we had a severe drop here, about 12% or so in 2022. So this is an unprecedented time as you can think of here. That's why we got to go after the solid fundamental companies and be selective if you want to play short squeeze game. Look, we got 2020 here. This is a COVID-19 drop. Look, by April, we already recovered. That's why it's a 10% drop in S&P 500 from January to April. But if you looked at this data from January to March, we might be a little more higher here, maybe say 15-20% drop because January to March was a big drop back during the COVID days. All right, so now let's jump in and look at market update. From a market update perspective, we have Ukraine. It says Russia is pounding Donbass here, but it's failing to take targets. In a nutshell, we got still geopolitical tension going on. We have to be careful. And China has got this factory activity falling to the lowest due to the lockdown. That's why we got to be careful here. China is still battling the COVID-19. We have to be careful. And Dow Jones tumbles more than 900 points on Friday, and Nasdaq books worst months in January since 2008 crash. So this is where it's mainly because we got a lot of things in the air right now. The China lockdown, the Russia-Ukraine situation, supply chain issues, and we got Fed trying to raise the rates. All these things are up in the air right now. That's why there is no certainty in the market. That's why market is very, very, very volatile. And days like Friday, don't worry, always buy some great stocks and ETFs. You will do very well. I've been doing that myself personally. And look, we got Amazon.com. It's suffering a biggest sell-off in more than 10 years, wiping $183 billion. So that's a huge drop in Amazon. It's also a great buy at these levels. All right, now from a market update perspective, look what's going on here. Dow Jones Industrial Average, big drop. Look toward the end, we got two red candles. That tells you Monday we might have a little bit weaker opening. And same story here, Nasdaq big time drop, look down, and also huge drop here. Look at 4.17% drop in Nasdaq. S&P 500 also look big drop here, two big red candles. So overall market, it did not find any support level here, and everything is dropping, crashing down on Friday. Great buying opportunity. You could this is the time to buy selectively and buy some great stocks. All right, now if you look at the market, big indices, we got Dow Jones Industrial Average, look down. Look at this candle, big down candle on Friday. So this is when I love to buy some great stocks and ETFs. You could even buy DIA, which is Dow Jones Industrial Average ETF. Look, we are not yet retesting levels in Dow Jones yet, so it might come down further and retest the lows. And then you got S&P 500. We are almost at the retest level here, so I think it's a great one to buy. You could do very well buying SPY at these levels here. And then you got Nasdaq. Nasdaq already retested its lows here, and you could slowly bulk up and slowly buy some QQQ. You will do very well. And Russell is weaker. It's already below. It retested, came down, trying to bounce here. Russell is also a good long-term buy. On the other hand, gold is pretty stable here, mainly because of geopolitical tension. And on these down days like this, gold goes higher, mainly because folks want some safe haven. Gold will give the safe haven hedging strategy. That's why, when the market is down, look, gold goes higher. So gold is a good one to buy when the market is up and when the gold is down. Right now, gold is giving you some nice safe haven, and it's giving you some hedging. Market drop big time, gold goes higher. So that's why it's good to have about 10% allocation or so in your portfolio for hedging for gold, which is a safe haven. Look, crude oil is pretty strong, mainly because of geopolitical tension, and oil producers are a little more cautious. They are not pumping like before. That's why oil is pretty stable here. So on the down days like this, look, oil is down 1.25. You could buy some energy ETF like XLE. You could also buy your favorite stocks like ExxonMobil and Chevron. And we got bond here. Look, bonds are dropping big time. Fed is selling bonds and tapering down. That's why, look, there is some good support level here. I would not buy a bond at this level, because if Fed taper down further, bond can come falling down. And from a interest rate perspective, look, interest rates are surging higher. This will cause some issues, especially for companies with a high debt load. And also consumer will also start seeing the pinch. That's why mortgage rates are going higher. That will impact home buying. All right, now what we'll do is we'll look at 5-year chart here in S&P 500, Skew and VIX. This is one of my favorite chart to look at and see what's going on here. We got here S&P 500, and see S&P 500. This is a huge COVID drop back in March of 2020, and we recovered. And look, we are in a small drop situation here. Market is trying to go down, as you can see here. And these type of drops, I'll be buying slowly, no big deal. This is when you buy great stocks. And from a skew perspective, when the skew is high, look, we got a high skew just before the market crashed. This is telling you, hey, watch out, market is going to crash. That's why anytime skew is above 150, I will be careful. I'll be trimming my positions and keeping some money ready, because when the skew is high above 150, a crash will be imminent and it will coming. And same thing happened. Look, we got right here, skew went higher, and we have a small drop here. Same story here. Now we had a high skew somewhere here in July time frame last year, and look, we had a nice drop here. So typically skew tells you, a couple of months in advance, sometimes even a month in advance, what might happen to the market. And look, we had a little bit high skew here above 150, and now market is coming. You had a heads up here, and if you scan through here, we got a heads up right here saying, hey, skew is high, watch out. And then market came crashing down. Typically it's good to look at the skew even though you're not a big time options trader. It's good to look at skew and see what it's doing. It will give you a heads up to you when the market might be selling off. And look, we got volatility. Volatility is surging slowly, as you can see here. Back in COVID days, look, volatility picked up big time. It was 85, but right now we're at 33. That's telling you, even though market is dropping off, volatility or VIX is saying, don't worry too much. It's not as severe like the COVID days. So that's why, volatility is really diverging. Even though market dropped big time, volatility is not dropping too much, because there is always a hope, because we got a lot of things in the air right now with Russia, Ukraine, and China lockdown, and we got interest rates, supply chain issues, and Fed trying to raise the rates. If one of these factors cool off, market can go higher. That's why volatility is not surging like before, like back in COVID days. All right, now let's jump in here and look at the major ETFs and monthly return. What a bloodbath. Look, we got major ETFs here, DIA, and we got SPY and QQQ. One of the weak ETF here at these levels is QQQ. Look, monthly drop in April for QQQ is 13.60, and next weakest is IWM. It's a lower cap stocks here, Russell 2000, and then you got SPY also a little bit weaker, and DIA is holding pretty much okay here, not too bad. And look, we had January and February, both are down. Look, 2 down months here in Dow Jones, SPY, and QQQ. Then we recovered in March. This is the volatility I'm talking about. These are the volatile times. Then you got September last year. Look, same story, huge big drop here. Then we recovered. So if you're a patient investor or a patient swing trader, all these opportunities are good buying opportunities. I would be bulking up slowly on my favorite stocks and ETFs, and I know trend will continue. When the market drops so much heavily, it will always come back with vengeance. All right, now let's look at the weekly returns. From a weekly return, look what's going on here. Look at past couple of weeks, past 5 weeks or so here. Look, we got 1, 2, 3, 4, 5 weeks or so. Market is dropping down. This is when all the long-term like option buyers, as an example, they will get clobbered with this huge drop, and looks like there's no end to this, but it's a good time to really slowly start buying some great stock. If you're a long-term investor, you could also buy some options in QQQ, SPY, long-term options, and also Apple, Amazon, Google, and so on and so forth. Look, we had similar situation back in March. Look, we got 5 weeks continuously down in Dow Jones, but after this we had a nice rally here. The 2 weeks nice rally, and look, we got 4 weeks here down continuously, and then we got a rally here. That's why this time is not different. Market always does its thing. When it's down like this for continuously 4-5 weeks, you can expect a bounce off, especially if one of these factors like China lockdown or Russia, Ukraine, if situation gets improved, that will be nice bounce back here. That's why I like to have some patience and buy very slowly and methodically when the market drops off for the extended time, like in this case 5 weeks, as you can see here. All right, now let's jump in and look at the ETFs. We will not cover this in too much great detail, but in a nutshell, look, in a 1 day here, ETFs dropped big time. All these broad-based ETF dropped big time. Only exception is EEM, emerging market, mainly because it's very severely punished. Look, 24% drop from 52-week high. And keep a watch on the 52-week high here. Most of these ETFs have dropped big time from 52-week high. And I also like to look at that 5-year and 10-year performance. This is going to guide my investment thesis. I look at 5-year, 10-year, and that tells me what's strong. For example, right now SPY, even though sky is falling down, it's falling off. Look, 5-year and 10-year, it's done great. That's when I go and buy some SPY. Same story, QQQ. Look at the performance in 5-year, 10-year. That clearly tells me this is a short-term issue. So that's why I buy, ETFs like QQQ and SPY. And also look, we got a few more here. Even Russell 2000, which is a broad-based small cap ETF. Look at the performance in a 5-year, 10-year. That tells me, hey, it's a good time to buy some of these ETFs. And look, we got few more here. We got XLY. I love this one also. If you're a long-term investor, you could bulk up on XLY. Look at the long-term performance. It's great here. And look, we got one more here, XLK Technology. You could bulk up on that technology here. Great performance. And I got few more as you can scan through here. I love SMH. All the semiconductor stocks are really down big time. Look at the performance in SMH. 5-year, 10-year, it's great. Short-term pain. If you're a patient investor, buy some SMH here. There is no single stock risk. You will do very well. So I would use this as a guiding principle. Look at 5-year, 10-year. If an ETF has done great, don't worry about short-term pain here. Buy some of those ETF. You will do great. All right, now let's jump in and look at stocks with a heavy short ratio. All these stocks have got volume, actually more than 1 million shares traded. These are very liquid. As we look through this segment, we will also talk about how do we identify some of the short squeeze candidates. All right, so with that, let's jump in here. So look, we got the names here, and keep watching the short ratio. This list is sorted by short ratio. Stock on the top here has got highest short ratio. From there onwards, it will drop off. And one of my favorite indication is to look at both insider and institutional buying and selling indicator. By looking at this, typically I look at where the investors are buying and institutions are buying, and then go after such candidates. And I also look at relative strength index. Relative strength index less than 50 are the ones or the go-to candidates, because that tells you when the relative strength index is below 50, these stocks are sold off. It's good to start initiating. On the other hand, if your stock has got high relative strength index, say more than 60 or more than 55, like ESPR here, I will not be putting my money here, because look, stock has already gone up higher, 20% in 1 month and 56% in 3 months. I would not go after such candidates. And we got one more here somewhere with the high RSI here, VTNR. I would not put my money here also. Look at the performance here. It's done great in 3 months, 10 days. I would not put my money here. Instead, I would go after better candidate. And I would also, if you're a conservative investor, look at the net margin. You go after the net margin positive companies, and also look at the free cash flow. If you're a conservative investor, go after free cash flow positive companies. And I also look at the overall score. Higher the better. During the tough time, I would go after better overall score. And look, we got some candidates with nice high overall score. For example, we got one right here. Camping World stock has been getting clobbered. Look, it's got a high score here, and Camping World, as you can see here, in 1 day, it's saying here I'm done going down. I want to go higher. And look, it's got a high short ratio here. High short ratio 42% here, and low RSI of 38. I would look at such candidates here. And you could also look at the future expectation. How is next year earnings growth and revenue growth? Higher the better. I would probably avoid the ones with a negative if the overall score is low. So with that as a guide here, we got few candidates we could look at. And we got here Camping World. I would probably look at that one here. And look, we got few more here. Look, we got ATUS. I would not buy this one here, because look, the performance here, it's all red. There is no green here. I would not probably buy this one, even though there is some insider buy. And then you got Asana here. Asana CEO has been buying his company big time here, and it's got low overall score. I've seen Asana going up and down. Look, 44% insider purchase here. I would probably put some money into Asana. This can bounce back from these levels here, but mainly because even though it does not have performance here, this can bounce higher. Mainly CEO and the founder is supporting this company very well. And as you see here, we got two more companies here, Tiger and Mavis Microvision here. Both are China stocks, as many of you know here. They're trying to go higher in a one-day time frame when the market is dropping. Looks like Microvision is trying to go higher in 1 day as well as 5-day here. And both have got lower RSI. You could look at such candidates here. So that's how I would look at. I would look at 1 day, 5-day also to see 1 day, 5-day, 10-day how it's doing. Is there some indication it'll go higher? Look, I also like UPST Upstart Holding is trying to go higher in a 5-day time frame here. You could look at such candidates. Upstart also, as you can see here, it's got positive net margin. Company is making money. You could look at such candidates. All right, so we'll look at a few more candidates. Look, continuation. Look, all these have got high short ratio, as you can see here. So as usual, watch what insiders are doing, what institutions are doing. And look, we got some candidates right here. We got Carvana CEO here, Ernie Garcia Jr. He's buying his own company share here big time. Look at the insider buying here, 206%. At these levels, I would buy with the CEO Ernie. I think it's a good bounce candidate here. Even though stock has not done well in the past, as you can scan through here, this has got some hope. They also have some deal with the Hertz, as many of you might be knowing. So I would put some of my money into Carvana. Mainly it's completely sold off. They do have high debt, as you can see here, but this could be a bounce back play here, mainly because the CEO and the founder and the CEO Ernie Garcia, he's buying his own company share. And then we got a few more here. Look, we got Inovio. Looks like there's a nice institution buy. Stock is not responding. You could look at such candidates, but I love the one where there is some response from the stock also. And look, we got a few more candidates as you scan through here. Keep watching 1 day, 5-day here. If you see some bounce in 1 day, 5-day, 10-day, you could look at such candidates. Look, we got Future Holdings. It's a China-based stock trading company. Nice overall score, 68. There is some hope this can go higher. Look, it went up in 1 day and 5-day. Still low float here. You could play short squeeze game on such candidates here. It also has got net margin positive. Understand, Chinese stocks are not for all the investors. You got to be daredevil to buy Chinese stock like this. And we got a few more. Keep watching 1 day, 5-day here. We see some some improvements in some names here. For example, we got one right here, Allo. Allo is also trying to recover in 1 day, 5-day. You could look at such candidates here. It also has a little bit higher overall score of 45. You could look at such candidates. And we got one more here with nice 50 score here, which is I think it's Nostrum 50 overall score, and RSI is 43. You could look at that one also here. This also can bounce back. Right now it's down, as you can see here. All right, that's how I would go after such candidates. And let's look at one more here. And same story, or the short ratio is high for these names. It's in the descending order. And then I would look at insider and institutions, what they're doing. And look, we got Groupon here. Groupon, one of the insider bought a very high number of shares. That's why Groupon is going higher. Look at Groupon insider and institution purchase, high purchase here. Both are trending higher. Insiders as well as institutions are buying. And look, it's a net margin positive company. It's got a little bit higher debt on its balance sheet. But look, it's trying to go higher in 5-day time frame, and RSI is 49. I would probably put some of my money onto this one, especially because it is heavy insider and institution buy, and stock is responding slowly in 5-day time frame. And I would look at a few more candidates. Look, there is nothing else from a insider institutional perspective. Then I would focus my attention to 1 day, 5 day, 10 day here and see what's going on here. If a stock is making a slow move, I want to be there to see what's going on there. Look, we got Geo. Geo is just a $6 stock. It's got some 5-day improvement here. Overall score is 53, which is above 50, not too bad. I would look at such names here and see if it's worth going after it. On the other hand, REI, it's a high RSI. I would not go after it, and I would go after the companies with a little bit less RSI. Look, we got overstock.com here. It's one of those stocks which is very volatile, and look, it's going higher in 1 day time frame here. And you could look at such names. Overall score is 61, which is pretty good. I love the one with the higher than 50 for the most part. And we got a few more. I would use that methodology. Look at how the stock is doing in 1 day, 5 day, 10 day. But I would avoid the stock which already surged, like Zyme here. Zyme has surged so much here. I would not go after this one here. Instead, I would go with the better candidates which are slowly recovering and not in a fast pace. I love GFS, Global Foundries. You might know this semiconductor stock. It's also trying to go higher here in 1 day, in 5 day, 10 day. I would go after such candidates because these stocks will do well. And same story with India, again a semiconductor play. Many of you know this company. Look, there is some nice uptick here in 5 day and 10 day. That tells you semiconductors may be recovering here. You could go after such candidates. All right, now let's look at the last page here. And same story, look at the short here, all high short ratio. And next you look at insider and institution here. What you see Party City here with the nice insider buy here. Then you see how the stock is doing. Stock is not responding yet. It's got a low RSI, and this one has got, let's see, this one has got a little bit high debt load on the balance sheet. So you got to be careful with the high debt load candidates. If you are a daredevil, you could buy some, but normally I would pass up on the high debt load candidates here. So then we got a few more. As you see here, we got HYZN, Hyzon Motors. Looks like insiders are buying. And you could look at such candidates here. Stock is not responding yet. You could slowly, buy into such names here. And we got one more here, Stitch Fix. Stitch Fix looks like insiders are bulking up on this one. It's also slowly responding. You could buy this one slowly here. It's up 5.7%, but still low RSI. RSI is 44 still. You could buy some of these names here. All right, now next I would look at 1 day, 5 day, 10 day here. If you see some uptick here, I would look at those candidates. For example, Canopy. Canopy has been beaten down, as many of you know here. There is some positiveness going on here. I would look at such companies. RSI is 40 is still low, high short ratio. I would look at companies like Canopy at these levels here. And as usual, look at 1 day, 5 day, 10 day, and identify some good ones you could buy. And I like the overall score higher the better here. There are some with nice overall score here, like HZO here. Look at the overall score, it's 99, one of the highest. Stock has responded slowly. You could look at such candidates. It also has got positive net margin. All right, so what we'll do now is we'll just quickly sum up and conclude. So from a conclusion perspective, look, when the market is volatile, be very selective when you select the short squeeze stocks, and look for relative strength index or RSI, lower, for example, less than 50, like you're talking about, and look for insider and institutional buy. That will tell you there is some conviction from insiders, and look for the stock showing some improvement in 1 day, 5 day, 10 day, and that tells you there is some good progress here. All right, so also conservative traders look for positive net margin. So you want companies with a positive net margin and positive free cash flow and higher overall score. That tells you, hey, you know what, be a little bit selective in this market and go after the better fundamental stocks. And few good picks that I might be looking at as in the next week is Asana, the insider, Dustin, founder and CEO, he's buying his own share. I might put some money there. Upstart, again, a good one, positive net margin. Carvana, Andy Garcia Jr., founder and CEO, he's buying his own company share. I would look at that one. Groupon, huge insider buy. I would look at that one too. And then you got GFS and Indy, both are semiconductor plays. I would look at those. You got FRSH, Lithium, Lithia, LTHM, Zillow, Redfin. I would look at these names here and slowly initiate some position and go from there. So with that, thank you very much. Happy investing and trading. Please